Hey Fidelity Fortune Hunters, Tom Wilmot speaking. Let's take a look in this video at two setups we've been using that I translated from my work over in MetaTrader and Forex to this Fidelity Active Trader Pro environment. We've set up a template that looks like the multiple moving averages that you see on this chart. This is a chart of Walmart. We're going to use Walmart and Citibank to show you a couple of those setups, as well as taking a look at one tip for the history viewer so that you can see just the correct number of candles on your chart at any one time, whatever you prefer. So hold on to your hat and we'll get started right after this. Okay, friends, now a couple of warnings just before we begin. First of all, I'm not certified to do anything in financial analysis except give you my lousy advice. So take everything we say here with a grain of salt. I don't want anybody getting in trouble. On the other hand, I do want to show you what I think are the maximum opportunity setups that you can use, not only in the Forex market where I've been trading for 15, 20 years, but also here over in equities and options. In particular using the multiple moving averages that you see on the chart. Now the purpose of this video is not to explain that to you. There are plenty of others in the list that we have on YouTube at our channel, fxfortunehunter.com. That's our website too, fxfortunehunter.com. In any event, what I do want to show you today is how you can put these multiple moving averages into practice. And there are three basic things I can show you here that would get you off to a running start. Now, why is the strategy pretty important? Well, number one, it has some unlimited upside. We try always to enter when the trend is moving in our direction, the master trend. Number two, and probably most important, you can control your risk. You can put your stop loss exactly where you know you want to get out of the trade because it's gone against you. There's no fooling around. There's no moving the stop. There's none of the funny business that your psyche can do to you when you're trading, especially if you're trading all alone and your mind begins to play tricks on you, as it often does. Okay, so the only other warning that I'd like to put here, especially for those of you who are not familiar with puts and calls and options trading, there are a lot of sophisticated options trades, and many of them are perfectly reasonable and rational and limit risk. The one thing you do not want to do is sell someone a put or sell someone a call if you do not have underlying stock to protect yourself in that trade. So in other words, if you're not doing covered calls and covered puts, don't do it. Don't sell because it can get wildly out of control, especially in a market that's this volatile. So I'm no options trainer, but there are lots of videos online that can help you understand how that works. And if you shoot me a question, I'll try my best to answer it honestly. But really and true, be careful of naked puts and calls. Okay, having said all that, let's take a look at what we've got here in terms of Walmart. This is the typical setup that we would use whenever we're involved in our trading. First and foremost, we want to be trading with the trends. So let's take a look here. We've got multiple moving averages, and I added even this one here, which you can see is an 8 moving average to our typical 12 through 24, and then this is a 47, or you can use a 50 if you want to. But bottom line is, when these are facing upwards, you know you're not wanting to be in a position where you're short because the trend can move against you quite rapidly. Now, it may look at a place like this that you may want to short, but look at the support down here from the longer-term buyers. Same thing here. These are counter-trend trades, and you don't want to be going short unless there's just a lot of reasons for that go beyond what I'm trying to teach you. In my book, The Amazing Zeelander Flytrap Forex Trading Strategy, it shows no matter whether it's Forex or options or equities or bonds or goatskins, you do not want to be taking counter trend trades. Check that book out on Amazon. It will help you if you're new to any of this technical analysis. Okay, now what the typical trade is, as far as my approach to this is concerned, is you can see here that the 8 and the 8 and the 12 have crossed over the 24. There's your crossover period. In Forex on MetaTrader actually wrote an indicator that puts a medallion down here, so I can see that more clearly, but it's pretty easy for you to see. This is the place where that happened. For those of you who've read the Zeelander book, the bottom line is that if we were to draw a horizontal line at the close of this candle that was involved in this, and it would be right here, you can see that this is the area where you can set a stop also. You would like to see a continuation of the trade. In other words, a continuation of the trend where the moving averages here cross over this Zeelander signal line. That's good in Forex. It's good here. It means you're confirmed and you're in an up move. But even if you do not take that particular trade, okay, let's get rid of this line or move it down and out of the way. What happens here is that you'd like to think about taking the trade after you get the pullback, the very first pullback after the crossover occurs. Notice we're clear here of the 47. This is also a valid trade entry. And what happens here is that you get this bounce. You get a sense that that's all she wrote on the downside with that counter trend. And so any of these entries here would be worth your while. And in terms of Walmart, whether you're buying securities or you're trading options, say calls or put credit spreads to the upside, you would have from 145.80 all the way up into this area here, which at the high, and notice this little bubble on the candle, and you go back over here and check out where you are when that happens. The high of the day here in this particular area was 150.94. So you had that move from 145 to 150.94. That's a 5-point move. If you're trading options, that's enough to keep the wolf away from the door and maybe pay the mortgage for the month. Okay. This was also as kind of setup number 1A. That was the pullback into the bands after you get the crossover. The second thing is watching for runs into earnings. Typically, what you'll see, if this is the case, the earnings are here, and you could find that by going here to events and clicking on this earnings to get it to print on your screen. And we showed you last time how to get the earnings announcements, the future ones, to print in your watch list. But in any event, notice here we had this nice run up into earnings. You don't want to be in the trade at the time the earnings are announced. It's the run up into earnings that would be, kind of set up 1B. Okay, so now let's turn our attention to Citibank because I want to show you another setup. Sometimes you can get a momentum trade. This is the Citibank chart, and we can see here. Now, by the way, I didn't mention it before, but on the wall I have a 195-minute chart. And obviously, those of you who've listened before know that the reason I use 195 minutes is it provides you with 2 price bars or 2 candles per session. So that's just a way to get beyond the little bitty view of daily trades, which are good, but I just like a little bit more, granularity to the thing. You could also drop down and get to the 78-minute. We've shown you how to do that in the past as well down in this area here, but for now, let's stick with our 195. Notice Citibank was trading in this range here. It had an earnings report. It pulled back. It kind of found a downside bottom here. It moved back up. It was toying with us basically around the first few days after the election. Then all the financials just had a real nice bump out, whether it's Morgan Stanley or Goldman or in this case Citibank. We had a nice move to the north. Now, what I wanted to show you is how clearly this pattern exists. After your breakout, here's your morning session on that breakout day. Notice that we never come back and test down in this area. This would be the other area. But if you can get through this whole day and never take this out, there's a pretty good chance you're going to continue on this kind of nice move. And notice we just danced above the 8 all the way up here. We never had any pullbacks, even here, that challenged us to say we need to get out of this. Now, what I would do at this point is I would put my stop underneath this particular candle here. And the low for that day was in the neighborhood of 46.26. Notice we never took it out at any point. Now, when you get to this point and you break up again, you move your stop higher. I would put my stop in this area here and just follow the trend all the way to the top. Notice this would be okay for weekly options trades. You might want to go out a week or 10 days. You could also go for a monthly, but the volatility has been so awful lately. The weeklies tend to have been a little friendlier and less perilous. So, guys, that's it. The first setup was our pullback into the bands. The second B part of part one was that trade into earnings. And this was our third setup, second actually major setup, which is this dancing above the particular set of moving averages. And clearly down here you can see in our RSI we're well above the 45.55 with no challenge at all. So just hang in there and let her run. Okay, just very quickly before we close it out here, I wanted to show you the possibility that this works also on the downside. Uncharacteristically, Apple's been having its issues lately. I changed this now to a 78-minute chart, and that means now that we have 5 candles per session. But it just is to show you more clearly what's going on here on the downside, and that the same kinds of moves occur time and time again. Okay, so here we had a nice move to the upside for Apple. This was back on the 12th of October. Then we had some pullback. We tried to bounce off the 47.50 and couldn't do it. We came here, and it's in this area here, you see, we have our crossover. Now, in fairness, we could also say here we are with the 47.57. We come down into this area. There's your continuation of that first downside move. And notice here the beautiful pullback into the bands. It's capped at the 50.47 level, and then we fall off here. It comes back and tries again to take out the 47, and it's during this day of 5 candles that we see there's nothing going on, then a pullback, a little move up into earnings, some kind of capability of thinking maybe it's going to break the trend and head higher. It's those Apple optimists at work again, but then down we go, down, down, down. So in any event, just to let you know that the opposite works equally as well, especially if your longer term trends are headed down. It's been kind of a choppy market, so you have to be a little careful. But to show you the pattern, that's it. Now, I promised you also I was going to show you something on the history viewer that I had not shown you before. Remember, if we go here, we can change the number of bars in our particular settings. Now, this is the area where here, if we wanted to make this fatter, we can move by grabbing this. You can see that our bars are going to increase and be bigger. Now, the thing I wanted to tell you about, if you want to go back in time, rather than, you have 2 ways to do that. You can left click on the cursor and then go backwards this way. But you can also find, if you click inside these boundaries of the history viewer and you left click and move, you can move your chart back anywhere that you'd like to. And here's the area. So now we're back around the 21st of September over in this area, and so forth. So that's the way you can move with this history viewer backwards and forwards to see more history. And surely you can see again, look at this nice move to the downside on Apple. Down we go with the crossover, pull back into the bands, down we go, pull back, but do not take out our stop loss level, continue and down, come back to the 47.50, don't take out our previous stop loss level, and off we go to the races for a nice move to the downside. Okay, those are my 2 tips for the balance of this video. Thanks very much for watching. Don't hesitate to give us a like and don't be stingy. Subscribe to our channel. If you'd like updates, hit the bell and we'll send you an update on the YouTube messaging board if we post new material. And also look at the description under this video and you'll see about our books on Amazon and any other ideas that we might have for you. Thanks again for watching. If it's Thanksgiving time for you, happy holidays, and we'll talk in the next video. Take care.